Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company, is with us. Nilesh, good morning. Great to have you on the show as always. So I want to start not with when will the all-time high come or not, but I want to ask you, when you speak to all of your fund managers, do they still find a lot of comfort in this market? Are they still enthused with a lot of ideas, stocks available at least reasonable prices, if not cheap prices? Or is stock selection getting difficult after what has been a breathtaking rally so far this financial year?
So to some extent, my fund manager's job has become easier as investors have started behaving very, very maturely. When markets are cheap, let's say 17,500 and below, we get SIP plus subscription. When markets are expensive, let's say 18,000 and above, we get SIP minus redemption. And last month, flows did come down, keeping in mind that behavior. But notwithstanding what happens on the liability side, we have to focus on asset side. And over there, yes, it is a bit difficult to find value in this market. It's a fairly priced market, neutral market, and one will have to be careful in picking up stocks at this point of time. By and large, we are long-term investor. Our portfolio turnover is about 10-15% a year. So we are not really looking to buy things with 1 year or 2 year view. We are looking to buy things with a longer term view.
Nilesh, hi, good morning. It's a great time to be chatting with you since the markets are at all-time highs. The mood in general is good. But, you know, we were having this discussion on our show Editors Roundtable, and almost every expert agreed to the fact that there is no euphoria in the market just yet, right? I mean, plenty of stocks are still well off their 52-week highs. Do you feel the same, that although the markets are at all-time highs, this euphoria from retail, this, you know, everybody jumping in because of the FOMO factor has not culminated just yet? And if yes, could that mean that there is perhaps more upside to the market despite all the triggers being priced in?
So, Sonia, this might be a little bit of bragging, but take this in a lighter way. The euphoria about India today is now with the FPIs. They were on exodus mood between October 21 to June 22, selling about $35 billion. And now they are buying back the same stocks at a higher prices. So undoubtedly there is euphoria about India, but that's more on the foreign portfolio investors than local investors. The local investors have been buying equity on a regular basis. By and large, they have been coming via mutual funds, right, rather than going directly into the market. By and large, they are focused on quality. So overall, retail investors have matured a lot. This is not to say that everything is hunky-dory in India. Even today, 89% of retail investors who are going to trading in FNO end up on the losing side. So there are two India coexisting, one matured, experienced investors participating in long-term story, the other which is trying to trade in the market, gaining the experience that trading is generally injurious to your financial health.
Nilesh, I think you and I have spoken about, I think over the last 15, 17 years, various points we've spoken about, you know, the fact that India's time has come, right? But this seems like one of those, and you're absolutely right. You look after publication after publication. In many ways, the stars seem to be kind of aligning. One new factor, which I think was not present in the earlier occasions, was the absolute, maybe a strong word, but you know, disgust investors are expressing towards the largest EM market, which is China, right? So that means that they're looking for opportunities elsewhere, and that is a really big one. It could be a big structural factor if that stays that way. We have Prashant Khemka also joining us, founder at White Oak Capital. Prashant, great to have you with us here. Thank you very much for your time. What are you guys doing at White Oak with where the market is now, and how are you thinking about it, more importantly, directionally from here?
No, certainly, very apt point that you noted about China. I think the leadership there for geopolitical priorities has what that has meant is the economic policies have taken a back seat. And that is playing to India's advantage when India is on the front foot in terms of its economic policies. So these confluence of events that have come together, which includes the fact that COVID and Russia-Ukraine is now business as usual. We are end of the global rate cycle, and without a massive fall off in economic activity in the world's largest economy that was anticipated, and this largest EM market, as you pointed out, competitively falling behind India, I would say in economic terms, has meant a big boost to economic activity, particularly in the manufacturing sector, and resulted in uplift in both the corporate earnings expectation as well as the multiple for Indian equities compared to the EM equity multiples around the world. So we are in our EM portfolio, for example, India is the largest position at this time, ahead of even China. And within India portfolios, obviously, we are fully invested as always, with largest exposure in sectors like financials and consumption.
Prashant, in your now and in your earlier avatar as a sort of global manager, EM manager, I was reading an article in the Financial Times, which talked about how investors are asking for ex-China EM structures. This is something we highlighted last year as well, but that now seems to be happening. I mean, just like this Asia ex-Japan came into being some 30 years ago, now it is ex-Japan, ex-China. I don't know if that, if you're hearing anything or is the media making too much of it? Just wanted your thoughts, Prashant.
No, very true. Now we have to be careful because these things come and go. But yes, over the last 12 to 15 months in particular, the demand for China, EM ex-China or even Asia ex-China has certainly surged. We've had several inquiries, several requests from institutional investors in Europe and elsewhere, whether we can consider having a tailor-made portfolio without China. I think this is the peak bipolarity, if you will, that I have seen in my 25 years investing career globally, where the negativity on China is at its highest and the positive sentiment towards India is at the same time very high. So this relative positive attitude towards India compared to China, I would say, is at its highest. And it manifests itself in several forms. One is this ex-China demand, but also the number of clients that we interact with globally who are for the first time looking at India as a separate standalone allocation. So many of the US investors historically have had EM allocation and a China standalone allocation. But today, many of those clients are looking at India as a standalone allocation and are at advanced stages of discussions, not just with ourselves, but in the industry with many managers, and several of them moving their allocation from China to India. So both these are at their peak at this time.
Absolutely, Prashant. I think, this is a sense we've been picking up from a whole range of market experts, Indian and foreign overseas. I think the consensus is that come, late summer or fall, perhaps we should see, a big pickup in FPI flow. So let's watch for that. But in the meantime, Prashant, let me draw your attention to the micros, really. And you're someone who's seen so many different market cycles, right? So this mid-cap rally that started, it's only about 2.5, 3 months old. But already, if you look at the calendar year, then the micro-cap index is up 16%. The mid-cap index up, 13, 14%. Nifty is only up 5% or 4.5%, less than that. Now, my question is that are you already noticing any pockets of, small excesses building up, which could be red flags, which investors should really watch out for? Or do you think this is actually a very, very nascent, longer-term bull market, mid-cap bull market, and we should be prepared to see euphoria, prepared to see very, very high multiples as well? How do we approach this side of the market?
Certainly. I think we always have to be watchful, but this time it doesn't seem like it is out of place compared to where the rest of the market is. Remember, prior 12 months, if you see, so as you rightly pointed out, this uplift in mid and small and micro caps is largely 2-3 months old. If you look at last year, 22, these segments had underperformed large caps. Not by a huge lot, but they had underperformed nonetheless. So there's been some time correction in this area. And even if you look at longer term, especially over last 5-year periods, it's not that these guys have, the smaller or mid caps have substantially outperformed the large caps. So I'm not saying these guys are undervalued particularly and should room to have a big rally because of valuation reasons. But yes, the momentum may build up further. I don't think it's reached euphoric levels at this time. There are obviously certain political events in India, particularly the central election next year. And if that goes in line with market expectations, then it is possible post that, if this momentum continues post that, that might result in some euphoria.
Okay, so there's no euphoria yet in the market. Got that. Now we are virtually about 40 points away from all-time high. So let me try and just wrap up with Nilesh Shah and his comments. Nilesh, what do retail investors do now? Investors who have perhaps not jumped onto this rally as early as they would have, thought to. What is the best way to approach the market now? Do you load on to some of the sectors that have done well up until now? Do you find new leaders in this market? What's the best approach?
Sonia, I'll simply say, do your SIP in mutual fund and participate in India growth story. It's never too late to start your journey in SIP in mutual funds.
Okay. Go ahead. Go ahead.
Nilesh, give us some more insights. Some ideas. Maybe I know we can never discuss stocks with you, but I as a house, Kotak has been extremely optimistic on the manufacturing space. I think you guys like cement a lot, for instance. But maybe some more specifics where you still think valuations are reasonable and one can build that multi-year portfolio.
So clearly, this is a market which is fairly priced. There will be volatility in the days to come, thanks to various events from Fed pivot to central election. My recommendation to investor is, just build a diversified portfolio. If you are beginning, then a large cap ppportfolio is better. If you are a veteran, then dabble in small and mid cap also. But maintain a disciplined asset allocation and regular investing. Every correction is a great opportunity to enter Indian growth story.
Okay, got that. Prashant Khemka, final question to you. Markets at all-time highs. What do retail investors do? And what's the best strategy to adopt for the next 12 to 18 months?
As always, I would say stay fully invested. Figure out for yourself what's a comfortable level. That may be different for every individual, but don't try and time the market come in and out, because those are, in the final reckoning, the people who are left behind, who try and come in and out. I think, as Nilesh Bhai at some point in time has mentioned, the returns that investors get is a function of time in the market rather than timing the market. That's very, very aptly put. And if you think you are expert investor yourself in stock picking, indulge in that and enjoy that. But otherwise, the right advice, as Nilesh Bhai gave, invest in a good mutual fund, ideally through SIP, so that you get time diversification as well. But regardless of how you invest, stay fully invested at all times would be what my suggestion would be.
Okay, stay fully invested. That's some sane advice coming through. When markets are at all-time highs, people start to get a bit jittery. But I guess the optimism from both of you is flowing through. And thanks a lot for joining in, Prashant Khemka, Nilesh Shah. Appreciate your thoughts here on CNBC TV 18. Well, that's the word coming in on the market. Prashant Khemka saying India is their largest position in the emerging market portfolio. They're fully invested in India right now. And several investors are moving their allocations out of China and into India. Let's sip into a quick break. On the other side of the break, we will be joined by George Alexander Muthoot, who's the Managing Director at Muthoot Finance, to discuss the company's business outlook. Later, we'll also connect with Gangadi Madhukar Reddy, who's the MD and CEO at MedPlus Health Services, to discuss outlook on their business going forward.